Hello and thank you for joining us today for the second of our quarterly briefings on the shopper confidence of UK consumers. I'm Paul Langston. I head up our retail location strategy team here at CACI. Please join in and post your questions and I'll do my best to answer them as we work through this agenda. Now, as it's only the second of these sessions that we've run, I will start with a brief recap. Apologies for those who joined the January briefing, and I'll try and keep this bit short. Now, we've been working with our friends at BPS, the British Population Survey, for more than 5 years to track shopper confidence on a monthly basis. The analysis is based on the BPS asking a large and demographically stratified sample the same question every month. Here is the question. Thinking about your financial situation at present, how do you think it's likely to have changed, if at all, in 3 months' time? Now, we look at the net difference between those saying better versus worse and track this as a positive or negative percentage. Now, the key difference to our approach to those also monitoring confidence is that whilst the headline shopper confidence trend is interesting, our Acorn classification enables us to look at the trends below the headline rate. We can see how different consumer groups are thinking, and we can then link this to their shopping behaviours, brands and places where they shop. As a quick recap, let's start with the long-term headline trend since January 2010. As you can see, whilst the question is simple, it showed remarkably valuable results that have reflected consumer behaviour over this period and that we can start to use as a barometer of future trends. What we can see here is that we are now seeing a period with strong positive trend in consumer confidence. But we've come a long way since the last election in May 2010. After that point, we went into a long period of negative sentiment that only really ended at Christmas 2013. We saw the green shoots of recovery in summer 2013, then we feared we'd overspend and started to worry about Christmas, and there were also fears of interest rate increases and a new housing bubble. But Christmas 2013 ended up almost universally positive for retailers, and the recovery really took place in spring and summer 2014. We then saw what we're starting to see as a bit of an annual trend, the post-summer or pre-Christmas dip in shopper confidence in the last quarters of 2014, before the upward trend continued here to the end of March 2015. So now, that's set the confidence. Let's zoom in on the last 12 months of this headline confidence level. The positive news is that shopper confidence has risen by over 3 percentage points over the quarter to hit plus 12%. This is the highest overall figure since our records began. It's also 5 percentage points higher than this time last year. Now, whilst the rate of growth this month has dropped to the slowest for the last 4 months, this follows the biggest monthly increase since our records began between January and February. Another major positive is that we are now 8 percentage points higher than in March 2010, the equivalent point going into the last general election. So, at a headline level, things are looking good for retailers reliant on these consumers. So now let's look behind this headline trend at how the last few months have looked for each of CACI's 5 Acorn categories of consumer. Now, this chart shows a set of bars for each of the last 6 months, starting over here on the left at October 2014 and ending here at March 2015. Within each of these sets of bars are our 5 Acorn categories, which broadly decline in income from the left-hand bar, affluent achievers, to the right-hand bar, urban adversity. Please see our website if you'd like to know more about Acorn. Now, the chart shows more good news. Confidence is high across the full demographic spectrum, with all Acorn categories showing a rise in confidence since the end of 2014. What we can also see is that all of the categories have touched plus 10% in the last 2 months, something that we have never seen before. Now, I've highlighted urban adversity, the right-hand bar, as this quarter's key Acorn category, as they've seen a massive 5 percentage point increase in confidence since the end of the last quarter to reach plus 16% positive sentiment, and they've almost caught up with the rising prosperity category shown here. Now, it's encouraging to see such a strong growth in confidence in the least affluent Acorn category, implying that the economic recovery is now being felt at both ends of the economic spectrum. This growth in confidence puts the urban adversity category 10 percentage points above their position in March 2010 at the equivalent point before the last election. I'll drill into the more detailed Acorn groups within the urban adversity category in a minute, but let's first look at the other 4 categories. Like urban adversity, comfortable communities, the green bar, are currently at their highest ever level of confidence since our records began. They're sitting here at plus 11.5%. Now this key Middle Britain group are also almost 10 percentage points higher than they were before the last general election. Affluent achievers, represented by the left bar, reached their highest level of confidence a month ago, having jumped a massive 5 percentage points between January and February, before dropping back a little to their second highest month in March. Rising prosperity, the dark blue bar, have remained the most confident in every month since January 2014, and this big spending group saw a slight dip since reaching their highest level in October 14, but they're now almost back to that highest level. And finally, the orange bar, the financially stretched. They saw a small drop in the last month, but are still almost a percentage point higher than at the end of last quarter. And as they're pretty close to their peak, and given the trend towards confidence generally improving as the weather grows warmer, I'd anticipate that they will surpass their previous peak next quarter. So, in short, as we head into the spring and summer, we face an overwhelmingly positive view of economic sentiment. However, the sizable elephant in the room is the general election. What impact is that likely to have on confidence? I'll go into that in more detail in a minute. But first, if we break down the key urban adversity category into its 3 constituent Acorn groups, we see the following over the last quarter. Young hardship, who are the left-hand bar, I've highlighted as this quarter's key Acorn group. They have seen a massive increase in shopper confidence, rising from plus 7% in January to plus 15% in March. And again, this is hugely encouraging, as it is this group who've been heavily impacted by the recession. Much has been made by all political parties of the need to boost the economic prospects of this young group, with all of the leaders in last week's debate arguing that their version of the apprentice schemes will be the answer. So, does this recent rise in confidence mean that we finally turn the corner and that the recovery has finally reached this struggling young demographic group? Well, let's hope that this is the case. However, a wider look at the data show a rather more confusing story. The young hardship group was on exactly the same figure of plus 15% last March, having been at its highest level since records began the previous month. In fact, they averaged plus 14% throughout the first 10 months of 2014, before seeming to panic about their finances around Christmas and dipping to plus 6 and plus 7 in December and January, respectively. Young hardship are also one of the only Acorn groups to not be at a higher level than a year ago. And interestingly, student life, another group dominated by young adults, is the most significantly below the level of a year ago. This group aren't shown on this chart as they're part of the financially stretched Acorn category, but they've dropped from plus 16% in March 2014 to plus 10% for the same month this year. So here we have 2 young, relatively low affluence groups reporting consistently high confidence that their finances are going to get better. But they're also less confident than they were a year ago. So what does this mean? Well, remember that the question this analysis is based on is effectively, do you think that your financial situation will get better? It is not, has it got better? So the question is, does this constant positive answer reflect a belief that, in the words of the now old New Labour song, this group believe things can only get better? And does the drop against last year reflect increasing realisation that actually maybe things won't get better? But either way, there is some good news here, and that is that they certainly seem more confident that things will improve compared to 2 months before the last general election, because in March 2010 their confidence level was 11 percentage points lower at just plus 4%. Now, usually at this point in the briefing I go into detail about the spending behaviour of the key Acorn group, this time the young hardship group. based on our 200,000 plus surveys that we've carried out in shopping centres over the last 2 years. But as today I want to focus this month on the possible impact of the election, I'm going to leave you to view these stats for yourself in the infographic that we'll send to you shortly, either today or tomorrow. And the same applies to this list of significant brands that are likely to benefit from the growing confidence in the young hardship group, and this map of significant places where you'll find them located. Now, as a link to the election, let's wrap up this section by looking at the other Acorn groups in the key urban adversity category. We can see that the middle bar, the struggling estates group, have maintained a consistent level of plus 19, plus 20% confidence throughout the quarter. Now, this is considerably ahead of both this time last year, when they were at just plus 6%, and before the election, when they were even lower at plus 4%. And finally, the right-hand bar, the lowest income group, difficult circumstances, are now at a very positive plus 14%. They have grown considerably in confidence since this time last year, when they were at just plus 3%. However, interestingly, they went into the 2010 election at plus 10%, so not much lower than they are now. Clearly, at the time, they believed things would improve with the new government. But by September 2010, they had plummeted from plus 10% before the election to minus 17% as the realization of austerity hit home. So what else can we learn by looking back at what happened in the last general election? If we return to my opening chart from today, you can see the election in May 2010 marked a key point after which confidence plunged and spent many months in negative territory, only scraping back to plus 1% at Christmas 2012. So could the same thing happen again? And how would the trends impact different demographic groups? Well, first, let's be positive. We are heading into the election with a very different trend. Whilst headline confidence was in positive territory in the run-up to the 2010 election, it was already on a downward trajectory. Now, if we ignore the pre-Christmas seasonal dip, we are on a much more positive trajectory than we were then. So unless something unforeseen happens, things are looking much healthier now. But if we look at what happened to the individual Acorn categories after the election, we can see that whilst rising prosperity went into dizzy happiness after the return of the Tories, all of the other categories went into a serious decline. 3 of these drops in confidence were of 10 percentage points or more. The first of these was the big spenders and the business leaders in the affluent achievers Acorn category, the left-hand bar. The second was the mass market, the largest Acorn category, comfortable communities. They dropped to minus 8% by December 2010, having been at plus 2% this time 5 years ago. However, the largest drop was the 12 percentage points of the orange bar, the financially stretched, who were at plus 5% this time 5 years ago, and ended 2010 at minus 7. But if we compare March 2010 to March 2015, there is some good news. If you look at the left-hand bar change, set of bars change, all Acorn categories are heading into the election at a higher start point, as well as being on a positive trajectory. But the financially stretched orange bar are now only 4 percentage points higher than they were in March 2010. And at the other end of the affluent spectrum, the royal blue affluent achievers are only 5 percentage points higher than before the last election. So what would happen if the same percentage point shifts occur in 2015 as they did in 2010? I know it's pure speculation and I know it's unlikely, but it could happen if the same background concerns remain about the economy. If we apply those 2010 changes to the 2015 March figure, this is what we see. Whilst the rising prosperity, the dark blue, would spin off the scale into unprecedented happiness, we could see the affluent achievers down here and the financially stretched head back into negative territory by Christmas, with the comfortable communities only just hanging on in positive land at plus 2%. If this happened, the headline rate would have moved from a record plus 12% now to a rather more sobering position for Britain's retailers at just plus 3% this Christmas. As I said, it's an unlikely scenario as shopper confidence perceptions are currently at a record high almost across the consumer spectrum, but it is a sobering thought to see just how much things can shift if consumers feel vulnerable to uncertainty. Right, let's wrap up this session now and remember the positive elements that we've seen today. Firstly, UK shopper confidence grew by 3 percentage points over the last quarter to end the first quarter of 2015 at a new high of plus 12%. Secondly, January to February saw the largest ever single-month increase in confidence. Thirdly, confidence is high across the full demographic spectrum, with all Acorn categories showing a rise in confidence since the end of 2014. Urban adversity, rising prosperity and comfortable communities all witnessed their highest confidence levels during the quarter, showing the breadth of positive sentiment. The young hardship group, a group that struggled since the recession, saw the most significant increase in confidence to reach plus 15%. All categories are considerably more confident than in March 2010, just before the last general election. And finally, if the sharp decline witnessed after the last election is repeated, retailers will be pleased to note that the headline rate of shopper confidence this Christmas will still be positive at plus 3%. Yes, it may be some way below the plus 12 we're seeing now, but it's still an awful lot better than we witnessed in December 2010 when we ended the year at minus 5%. So thank you for listening to us today.